Welcome into a daily editorial here on the KE Report. Happy to report that I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, we're going to focus on a couple charts, more specifically the gold charts, as well as a few of the precious metal stock charts. First and foremost, for gold, you sent out a flash update to subscribers and you shared this gold chart, a daily gold chart, and focused on the 200 and 400-day moving averages. Both are below current price, 200-day moving average at about 1286, the 400-day moving average at about 1270. Both are below price, but the 200-day is sloping upwards. Any significance here having these two moving averages under price and at least the 200-day still trending upward?
Yes, I think it's encouraging how the 200-day moving average is acting. And even though gold, I mean, most of 2017, it went below the 200-day. I mean, there were numerous times that you would have been whipsawed out of the market, that it just went below by a little bit, and then it was a significant low. So the 200-day moving average, I think the key, Corey, is now in the very short term, I forget where gold is today, but yesterday it did break below 1325. So it's probably going to test that support around 1300. I mean, you could say it's from about 1297 to 1307. So I'm looking for gold to test that support area. And if it loses that, it would probably test the 200-day moving average. So to answer your question, how significant that is or how meaningful is that, it really depends on if gold gets really oversold and sentiment gets really encouraging from a contrary standpoint right around the time when gold is going to test the 200-day moving average. So it's a little too early to say. And that being said, even if it went below and it came down and tested the 400-day at 1270, that wouldn't really bother me that much. And also just looking at Fibonacci levels and then just eyeballing the chart of the last couple of years and looking at what might be a strong level. I mean, I would not be that concerned even if gold lost the moving averages and tested 1260. So I'm not with gold. I know we're going to get into other things, but I'm really not that concerned because I really think the stocks and silver, they've been so oversold relative to gold. And if gold is really, I mean, it sounds kind of counterintuitive, but if gold is really going to begin a real breakout move, we should be seeing a lot more strength from silver and the gold stocks. And we talked about that in the last couple of weeks, Corey, and that's why I didn't think gold was going to break out immediately, just because the rest of the sector was so weak. So those are the key levels for gold, the moving averages you mentioned. And I mean, there is some strong support, even a little bit below the 400-day. But to me, I am more concerned right now with how silver and specifically the gold stocks are acting, because I mean, they're gonna tell us when gold is ready to try and break out again.
Yes, they are. Usually we start to see the stocks outperform the metal. They haven't done that yet, but even in the last couple days, as gold got hit yesterday and the stocks got hit, you made a comment off mic to me that said GDXJ actually held up relatively well in your eyes. Maybe that could be the turn where the stocks weather a move down by the gold price, and that provides the impetus for a rally. But comparing the gold chart to the HUI chart, something else that you outlined in that flash update, again, talking about the 200 and the 400-day moving averages, the big difference that's glaring at me is that these moving averages, while under the gold price, which you can say could be supportive when gold moves down, these moving averages are above the current HUI price. That's a big discrepancy when you're considering that you're looking at a metals price and then the underlying metal stocks, isn't it?
Yeah, I mean, it really is interesting to think about the difference there. And just to also put in perspective, I mean, a couple of days ago, gold was not that far from 1360 or 1370, whereas looking at the Huey, I mean, yesterday it closed at a 14-month low. So that's interesting how gold has been at the top of its range, and the gold stocks, at least the gold producers, because that's what the Huey is, they're basically at the bottom of the range, and they've even kind of broken below it. So with the stocks, to get into the Huey, I mean, in I know it's up a tiny bit today, but after yesterday, the Huey had about 5.5% downside to its daily closing low in December 2016. And I have a target below that, which is about 10 or 11% down from where we are right now. We've been talking about the potential for the gold stocks and specifically the Huey to make a false new low. I mean, I know that the gold stocks are already fairly oversold. I got something in my inbox today that I sent to you about how the GDX is down 5 of the last 20 days, and when that happens, it usually rallies in the short term. But there was one time when it didn't happen, and there was a significant sell-off. So, I mean, I don't know if we're going to have a significant sell-off from this point because we've already sold off quite a bit in recent days and weeks. But that being said, Corey, I really want to see the Huey get down to that December 16 low and make a false new low, even if it's only intraday. I really want to see that and really get all these people flushed out, to set up a rebound, and then a rebound that could potentially finally evolve into a bull market. And as you noted, GDXJ, I don't know if it means anything right now, but it is quietly showing more strength than the Huey in the GDX. We'll have to, I mean, it's something that has happened, I think, over the last 3, 4, or 5 days. We'll have to see if that continues for another week or if it just kind of fizzles out. But that's something the listeners should keep in mind. And with GDX and GDXJ, I mean, those GDX is very close to breaking that 21 support, and I think if it gets down there, it's finally going to break it. Whereas GDXJ has just a little bit more breathing room. So again, I would like to see GDX break below that 21, get some people flushed out. I'd like to see the Huey. It still has about 6% to go, but get down to that December 2016 low and just break it, even if it's only temporarily. I really want to see people get flushed out. I really want to see oversold conditions really get just a little bit more stretched. And, obviously we have a Fed meeting coming up in the next couple of weeks. And Corey, you know that I really don't pay attention to that, but it is happening often where the markets or precious metals are selling off for their week into a Fed hike, and then they start to rally after it. So, I mean, who knows? It looks like we could be setting up again for another low right before, another Fed interest rate hike.
The timing really does look like it's setting up for that. And I think the real takeaway here is that for the metals, it's very much a muddled picture. We're seeing a couple stocks actually perform quite well as the general market is pulling back. Even yesterday, I noted one stock when I was chatting with our good friend David Erfley that put in a plus 16% gain when everything else was moving down. So there is still some interest here, but it's really hard for investors when the stocks are trading at the low part of their range. The metal is trading at, you could say, the high to middle part of its range. And every bounce we seem to get just doesn't quite break out. So there is that disappointment factor. And just to recap, one thing that I've brought up with person after you outlined it to me, and even has said it here again, is that a washout in the sector could actually be beneficial. It could finally wash out those weak hands, and it could actually bring in those value investors that, quite frankly, for now, haven't had a reason to do that. You want to wrap us up on that comment there, Jordan?
Yeah, and I'll just mention breadth indicators, which are very important. It's something I looked at. I mean, this is very technical, so I hope I can put this in layman's terms. But the breadth indicators that I like to look at which show what percentage of the stocks closed above a certain moving average. And over the weekend, I eyeballed it for about 50 juniors that I follow and track. Half of those are GDXJ juniors, the other half are a little bit smaller. And looking at those statistics as compared to the 2016 low, I was looking at what percent of this group of 50 stocks closed above the 50 and 200-day moving averages. And at the December 2016 low, those were in single digits, whereas right now, I think the percent that closed above the 200-day moving average were in the high 20s. So that doesn't mean that high 20s has to go all the way down to like 10 or 8%, but I'd love to see that percentage just get down below 20%, maybe 15%, I mean, that would be really encouraging. And Corey, the reason why you can get a really big rally on a sell-off right now, as opposed to months ago, is we go back. We've been trading in this range, and earlier in this range, we've been making lows, but we're making lows, and not that many stocks are oversold. They're still above the moving averages. But as we continue to consolidate, you get to the low range again, you rally, you get to it again. There's fewer and fewer stocks that are trading above those moving averages. So when you get to the end of the range and you have this breakdown, like we're starting to see now in the Huey, then eventually all the stocks get oversold. And that's what gives you the setup for a really big rally. It's when everything, you're talking about 85 or 90%, everything is oversold on a short-term basis. So what happens is then everything rallies at the same time, and that's why you get a very big rebound out of that, which we're going to get, I think, in the next couple months. It's just a question of, will that evolve into a bull market, or is it going to be a rebound that happens later in the year? So that's how I'm looking at things right now.
Hey, Jordan, always great comments. I always enjoy your newsletter. For people that want a nice level-headed view of the markets, I really appreciate and recommend checking out Jordan's newsletter. I read over it whenever he sends out his weekly updates and his flash updates. You're not going to get only bullish comments from Jordan, and hey, that's what I like to focus on, are people that can take a step back and look at these markets, because right now, again, it is a very muddled and mixed picture, but there is still reason to be optimistic. Just don't go all in all at once. Jordan, great chatting with you. Thanks again for your time today, buddy.